All right, let's talk about the stock market. This week, well, early part of the week, there was a tech sell-off, and the market was edging to the downside. Some AI stocks got hit hard, like PLTR. That was down 9% on Tuesday. And the questioning was the AI move sustainable? And then MIT came out with a report that showed 95% of firms are not seeing a meaningful return on their investments from AI. That kept pressure on the AI stocks all the way through Thursday. Retail earnings were under pressure also as Walmart and Target dropped on misses. So there were a lot of signs that there were things going on in here that were a good reason for the stock market to get at least sloppy or choppy. But then came Friday. Powell's Jackson Hole speech ignited the market to the upside. As I'm doing this recording right now, about 11 a.m., the markets are on their highs. Powell hinted at September rate cut. That's all the buyers needed to hear. And he said the softer job market was likely what was going to bring a rate cut. S&P 500 now is up 100 points. The Dow is up 870. And what's really notable, because the breadth figures have been showing us that there was buying coming in the lower tier stocks or in the value stocks, the breadth today is just phenomenally strong as we see the advanced declines up a super 2,400 to just 178 decliners. So here we are at this near the midday period, and the market is extremely strong. And I'm going to show you as we get into the indexes how those broader indexes, the Russell and the RSP, which is the unweighted S&P 500, was just remaining very, very strong. So if you didn't watch it, you could see the cycle analysis in the Dow Jones Transportation Average, which also would be included in where they would look for value. And that analysis I showed earlier in this show. And if you're watching a clip, go back and see that. That showed the likelihood that there would be some upside moves still coming. So stock indexes for the week, S&P 500 and the NASDAQ up and down a small fraction, where S&P is just edging to the upside, NASDAQ just a little to the downside. But the Russell and the Dow strong by 1.5 to 2% gains this week. So that's what went on this week. And now let's move forward and talk about the stock market. So we're going to look at the RUT, the RSP, the SPX today. And for those of you that want to see the NASDAQ and the full review and updated review every Wednesday, Arby does a great job on this in our Future Speak show. Also, you'll be able to see metals, currencies, foods, energies, crypto. He does all of that. And that's for levels 2, 3, and 4. So if you want to become a level 2, 3, or 4, you'll be able to then watch that show. It's just a great show. Arby is really phenomenal, really one of the world experts in our style of analysis. So make sure you do watch that. Let's take a look now as we look at the indexes. And we'll take a look at the Russell first. So what we have here is cycle analysis. For those of you that are brand new, on the bottom are cycle brackets. That's a drawing tool that helps us understand the energies in the market and the heartbeat, as we call it. And I'll expand that out for you in a moment. This is the reversal scout. That's where momentum turned positive way back over here in April. And the Russell has continued to move to the upside, really the strongest index right now. Here we have the daily chart on the right. I'll explain that in a moment. So let's blow this up and you can see the cyclical patterns that are in here on the Russell. And this minor cycle dip right over there, that is this low that we were looking for right there. And then it began to move up again. But you notice the reversal scout never turned negative. I mean, this has been positive the whole time. The upside objectives here were 2350 and then 2418. And you can see as we're moving through that 2350, that's a minor fib extension. For those of you that don't know where that comes from, it comes from this low to this peak down to this low, and then we put in these extension levels that you see right over here. This one over here at 24.16, and then one over here way up at 24.82. So again, this is the weekly Russell that we're looking at, and it has always, through this whole time since April, been strong. You can see where it turned negative over here on the reversal scout, had a little bit of a bounce, turned negative again, and then fell right down in through where the expected troughs were, right down over there. That was in that April low. So the Russell has remained strong. Let's take a look at the daily chart in here, and this is important because the Russell's really been an influence on the other indexes as the buying has come in. Now, this was a 16-bar cycle. We just shortened it a little to 15-bar, so that would have made the prospective cycle trough somewhere in this area. You could see where it came right over there, and then this next rally came right there. So this is the extensions that came off of the weekly chart at that 23.50 and here at that 24.16, and you can see where it hit the support right over here in what was a bullishly configured cycle. The low way down over here, the next low here, and then the likelihood of taking out that peak. Who would have guessed it would happen in a monstrous up day? Right now it's up almost 4% on the day on Friday, on that after that Powell speech. And important to understand this 15 bar cycle that you see right over here, because we're going to align that when we look at the S&P 500 shortly. So that's a look at the Russell. It's been strong. The momentum has not turned down over here. Let's just blow that up one more time so that you can see. What happened is that it turned neutral through a little corrective period, and then you got this upward momentum signal right over here. So even if this pulls back, it's likely it has some number of days that it will continue on the upside. So this is the slim ribbon positive, the reversal scout positive, the slim ribbon PO positive, and down over here you have the option bias indicator, which said keep your option bias to the long side. It went neutral in here for about a week and a half and then turned positive again right over here, which said get back to the long side, and that was absolutely great. So that's a look at the Russell. Now let's look at the RSP, which is the equal weight S&P 500. This is some important analysis right over here, and you can see in here as I blow this up that this also stayed positive the whole way in here. We had a little corrective period right over there, which is that minor cycle. Look at the minor cycle where it aligned up here, where it aligned here, where it aligned here. Those are really good, and each of those were positive cycles, and it continued to move up to new highs, except this one, notice the half cycle broke the low. That said the next rally would fail, and it did, and you got this move to the downside. So everything here is still positive when we look at the RSP, the equal weight, as the buyers were coming into other sectors of the market and holding the market as positive while we got this correction that was going on in the softening in the tech and AI category, because of course the NASDAQ doesn't look anywhere near as strong as this does right now. Again, Arvi will show you that on Wednesday. Let's take a look at the daily chart in here as we look at the RSP, the equal weight, and you can see in there the cyclical periods in here. Now this is a 26 bar. This doesn't match really well what we see in the Russell or in the S&P. So what I decided to do on the S&P 500 chart is to add this overlay on so we can get a sense for where a corrective period might come in here. So right now this RSP points to about 192 on the upside, which is probably going to come if it does in the next few days, and then we get into a period where it can correct. You can see each of these corrective periods. This one was so strong and the momentum stayed strong, it only moved sideways, as you could see there. This one actually had a dip into that period, and now it's been rising. Again, we had the option bias indicator only go neutral and then go positive again right over here. That was perfect. Here you could see the momentum actually turn positive right over there, right here, and really stayed positive and then had a momentum resumption there. Look at these green arrows here and how valuable they are. Again, this is the slim ribbon PO, which gives you these momentum signals. You can see that negative signal right over there and how good that was. So what we're looking at here is positive conditions in the equal weight. That has not changed. It has been positive. Now what I'm going to do is switch over to the S&P 500, SPX, because I think it's important to look at this and look at the effects of these other indexes as we overlay them onto the S&P 500. So this is the weekly cycle energies that you see there on the bottom. This is where that corrective period came. This is where the corrective period came. And this kind of purple is the equal weight line right over there, which then shows you it pretty much lays over the S&P 500, which makes sense. That says that, the direction is still up over here. Momentum stayed strong in the S&P 500. And that has targeted this monthly extension right up over there at potentially around 64.85. There's a minor extension right there at 65.87, as you could see, and then way up over here at 68.21. I have serious doubts about being able to get up to that level, but in a market that is panic buying that we see right now, you cannot argue that that could actually happen. So we show you the equal weight as it lays over in here, and note these two vertical lines right over here. What that says is that there is a trough due out over here in October on both the equal weights and the S&P 500. Now, until we get some sign that it's rolling over, we would not expect the downside to come and to get into one of these corrective phases. So I don't have the yellow period of risk in there yet, because we don't really have any sign yet that it's necessary to put that in there. The market has been bullish, and you can see in here the RSP equal weight. Now let's look at the S&P 500. And what I put in here are the equal weight cycle right over there. That's that 26 bar. Here is that 15 bar that was slightly reduced by 1 bar from what we had there in the last time we looked at it. So we're overlaying those. And what we see here as we look at just zoom in a little bit more, that the upside right over here in the Russell began, as I showed you on that other chart. And that means that whatever effect this daily chart on the S&P 500 has, it's rising, as you see right over there, and it's obviously is aligning with this upside move in the Russell. And then you have this RSP that is still, even though the arc has turned down over here, it clearly has not entered into the corrective phase yet. Those corrective phases are out over here, and there is some alignment over there in this early September period, where once this upside move is over with, and the S&P 500 extensions are 65.15, 65.43, and then up over here at around 65.97. Those are all possibilities on the upside in here. Now, if you get a decline, if the market starts moving down again, and I'm just going to grab this right over here, that is where the cycle low occurred right over there. Were that to break, and that's let's just say around 63.46 on the S&P 500, then that would set up this declining period right over there. Note that this goes, if I highlight the RSP right over here, that takes you out to October. Remember, on the weekly chart, I showed you that October corrective period, and what that means is that sometime in September, it's likely to make an important peak and then have a measurable correction out into that October period. Of course, we know that September, October tends to be a period when the market can have some downside. But right now, what do we see in here? Look at the option bias indicator. It has not told you to keep anything but bullish since way over here. This is May 2nd right over there, and it has kept your option positions long all the way through this time frame. If you look here at the slim ribbon PO, it has given you all of these beautiful upside warnings that there's going to be momentum resumptions to the upside. That has worked perfectly. So with these bullishly configured cycles where each of those has a higher peak and a higher trough, all of that has kept the slim ribbon and the slim ribbon PO into a minor correction here and then turned positive right there. All of this has been quite positive. So without this making a peak and then these momentum conditions turning negative, then without that happening, we don't believe that the peak is set here on the weekly chart. So you can see as I blow this weekly chart up right over here, that's essentially where we are with this upward push going on the weekly chart, which is the dominant influence. And if you go back and watch what I did on the Dow Jones, the lesson on the Dow Jones Transportation Average, it's very similar where there's some dominant force from the weekly chart is affecting this over here. And until you get some rollover here and some negative signals on the momentum indicators, then this upside is still in place, as you see. And the stock market just roaring to the upside here on Friday. So still, where you see the S&P 500 in here has not yet gotten back up to that peak. Yet, if I go back to the RSP and make that comparison at the equal weight, you can see what's happened is it's blasted up way past the peak and into that fib extension area, which is that turquoise area right up over there, the top of it being up at that 192 right there. So that's a look at the equal weight right there, and as it makes a new high and compares to the SPX, which is just getting up and testing that high right up over there, and likely will get up into this area of 65.18 to 65.45 before rolling over. So that's a look at the S&P 500 and how that compares to the S&P 500 equal weight and the Russell, and how we use all of that information together, and it all remains still bullish. Let's take a look here as we move over and look at our market condition monitor and see what these conditions are. So here we are looking at the intermediate on the market condition monitor, and you can see that where we are conditions that are very bullish or bullish there, and on the diamonds, which were weaker before, are only slightly bullish, but they are starting, see these upticks, they're starting to get better. Note the QQQ went from very bullish to bullish on the intermediate. It's still bullish, but there has been some weakening that we see in there. So if I switch this over to the short term to see where we are right now, with this big upside move that we have going on right now, the S&P 500 is neutral. So it hasn't regained enough strength on the short term in order to turn positive yet, which is interesting. That might mean there's an indication that the market's going to have some hard time continuing much more on the upside, as we see the NASDAQ is slightly bearish on the short term. So these are indications that it may be moving up into some kind of a final upside movement here, and then turn, into more of a choppy or corrective market. Still, we see bullish conditions in the Dow and very bullish in the IWM. So this is really a very great way for you to get a sense for the short term if you're looking at things, for like 1 to 3 weeks. If you're really in the near term, which is just a number of days, you can see in here what's going on is that you got an uptick in the S&P 500 and the QQQ to neutral, but the Dow and IWM very bullish. So that gives you a very good picture of what's happened on the near term. Let's go back to short term and just look at the stocks that are in here and see which are the top 10 for the ones that are very bullish, that you can see right over here. Sulfi Technologies, Sherwin-Williams, the Africa ETF, South Africa ETF, very bullish. Expedia Group, the shares of Italy, that's EWI, so we're getting some movement in the foreign markets that are positive in there. Nucor, Global X Copper Miners, that's really something because copper really has taken a hit, so maybe that's a sign that the miners are going to do better and anticipating an upturn in the copper market. You have medical device, IHI, IBB, the biotechnology shares. Those are all very bullish, as you can see. EWC, Canada, FXI, China, EEM. Really interesting that what's really showing up as very bullish are these foreign markets that you can see in there, while our market, of course, has been strong, but I showed you that some of our indexes have turned neutral. Take a look here at the very bearish. Well, we talked in the beginning of the show about the fact that Target missed on earnings, so did Walmart, and they're set up pretty negatively. Marvell Technology, as you see, that's in the technology category. Ingersoll Rand, the Brinker International, a restaurant stock. Starbucks, of course, in the restaurant category. Atlassian Corporation, restaurants, brands. Interesting when you look here at restaurants and retail. The consumer is under a ton of stress. If you look at all the rising defaults, that makes sense when you look at that. Domino's Pizza right over there. PayPal, where people buy things, they're buying less, so that's very bearish. Twilio is showing up there. This is really so valuable when you look at this, when you get a sense for conditions. Those are all the very bearish ones. You see IBM showing up as bearish. CMA Group showing up as bearish. So super valuable way to look at the markets and look at individual stocks and ETFs. We have those in here. There's about 350 different symbols that we have in here that are scanning all of the time. For those of you that are level 4 members, you get the intraday that are right over here, and you'll be able to really look at what's going on an intraday basis right there as we look at the individual stocks, the ones that are doing best here today as we look at that right there, or the ones that are doing worse here today, and gives you a good sense for where you want to buy or where you want to sell during the day if you're a day trader. So that's a look at the market condition monitor. You get a good sense for the value of that application. If you if you're a level 4 member, you want to get notified about changes in the conditions, you just click that and you click which ones you want to be notified on as the condition changes, and download our application, our desktop application for notifications, and it'll pop those push notifications up on your right on your device. So that's great for level 4 members. So just wanted to show you that, and I think you will find it extremely valuable if you do use that. That is the market condition monitor. If you are brand new, get acquainted, sign up for Snapshot Lite, go up to our free stuff. You'll get information every day on our analysis on the S&P 500. On YouTube, subscribe to the channel, click the notification bell, and like this video. Give it a thumbs up. Follow me on X at askSlim, and any questions you have on anything we showed, write to Matt at askSlim.com.